All right, let's talk about the stock market. I know, it can sound super complicated, even a little intimidating. But really, at its heart, it's just this incredible story about how we fund big, ambitious ideas. Everything from those historic spice voyages all the way to the tech that's in your pocket right now. So let's jump right in and unpack it.
So you're probably thinking, what on earth do old wooden ships from the 1600s have to do with my money today? It sounds kind of random, I know, but the answer is actually the key to understanding how the entire modern stock market works. To get it, we've got to go back in time to an age of adventure, discovery, and, well, a whole lot of risk.
So, our story begins way back in the 1600s. An idea literally set sail that didn't just fund these massive global journeys, it completely rewrote the rules of business forever. Okay, just picture this. You're trying to fund hundreds of ships to sail across the world looking for gold and spices and all sorts of treasure. The Dutch East India Company had exactly this problem. It was just way too expensive and risky for any one person or even the government. So what did they do? They came up with a totally brilliant solution. They asked regular citizens to chip in. In exchange for your money, you'd get a share, a tiny piece of the potential profits from a voyage. And then people started buying and selling these shares from each other in busy coffee houses and down at the ports. And just like that, without even really planning it, they had created the world's very first stock market. And that right there brings us to the most basic building block of this whole system, the stock. It's not just some random number on a screen. It's a real piece of ownership in a business. When you own a stock, you literally have a claim on that company's future success. So, how do we get from 17th century ships to today? Well, let's fast forward and follow the journey of a brand new company. Let's imagine it's a cool new coffee business as it gets ready to go public. For a coffee company, the biggest moment of its life is the initial public offering, or IPO. This is the day a private company basically throws its doors open and invites the general public to buy shares for the very first time. It's a huge deal. So how does this whole IPO thing actually work? Well, first, the company goes on a roadshow, pitching its big idea to major investors. Then, it teams up with financial pros, called underwriters, who help figure out a fair price for the shares and handle the big launch. Finally, the company gets listed on a public market, like the New York Stock Exchange. And at that exact moment, anyone, you, me, literally anyone who believes in that coffee company can buy a piece of it. And this is the part that is so crucial to remember. The second you buy that share of our coffee company, you're not just a customer anymore. You are now a part owner. Their success, in a very real, tangible way, becomes your success. Okay, so now you own a share. But you've probably wondered, why does its price go up one day and then drop the next? Well, it all boils down to this really simple but incredibly powerful force, the constant push and pull between buyers and sellers. Think of it like a giant tug of war. When a company has some great news, maybe they made record profits or launched a super popular new product, everybody wants in. Lots of people want to buy its shares. That high demand pulls the price up. But on the flip side, if some bad news breaks, a lot of people might want to sell all at once. That creates a rush for the exits. Demand dries up, and the price gets pulled down. So when our little coffee company is doing great, it's going to attract way more buyers than sellers. You can see how that imbalance creates this upward pressure, pushing the stock price higher. It's basically a signal of confidence to the whole market. But of course, the reverse can happen, right? If the company suddenly looks a lot less promising, investors might decide to sell their shares to lock in profits or maybe just cut their losses. When you've got way more sellers than buyers, the price falls and the company's value on the market goes down with it. But here's the twist. It's not always about pure facts and figures. The market is also driven by something way more unpredictable: human emotions and just a ton of background noise. I mean, think about all the things that can make a stock's price wobble from day to day. The price of coffee beans could spike, a key executive could quit, some bad press could come out, or the government could change a major policy. All of this stuff creates noise, and it can make a really good company look weak in the short term, or a struggling one look better than it is. And this really gets to the core of it. Human confidence, or, human fear, is like a massive amplifier in the market. It can take a little bit of good news and turn it into a huge economic boom, or take a little bit of bad news and trigger a financial crisis. This human element is what makes everything so dynamic and, frankly, so unpredictable.
So because of all this chaos and noise, pretty much any financial pro will tell you the same thing. Trying to time the market, trying to perfectly guess the peaks and the valleys, is a super risky game. The much more common advice: focus on steady, long-term investing in solid businesses that you actually believe in.
For centuries, this whole world we've been talking about was basically a private club for the rich and powerful. But that has completely changed. Now you have a seat at the table. And this right here is the biggest takeaway. Because of the internet, the stock market isn't just for Wall Street anymore. Normal, everyday people can now research companies, buy shares, and be a part of the economy in a way that was totally unimaginable just a generation ago. The doors have been blown wide open.
So here we are. We've come full circle, from those old spice ships being funded in coffee houses to you being able to invest in global companies from a coffee shop, probably with the phone in your hand. The whole system is more accessible than it has ever been. So the only question left is the one that really matters. What ideas do you believe are worth investing in for the future?